Hello traders. Today I'm going to be sharing with you exactly how I executed and managed to reach my targets on this trade that I recently shared on my free Telegram group. So the first thing that I did was to determine my goal. So my goal is usually to look for an untested zone. And for those who don't know what an untested zone is, I'm going to quickly explain that using demand and supply. So demand and supply is what moves the market. So the market usually moves in three phases. So there's an impulse, a correction or a consolidation phase, and another impulse. So this is phase one, phase two, and phase three. It might also be referred to as a rally, a base, a rally. So if this happens, we expect the market to come back to phase two and test this area before continuing in the same direction. This is called a continuation pattern. So for the bearish example, we expect a drop, a consolidation, and a drop. So the market comes back to test this area and drops. So I'm also going to explain the reversal pattern. So for the reversal pattern, we expect to see a rally, a base, a rally. Then when the market comes back to test this area, it begins to consolidate and break this area. So after breaking this, we expect it to come back to test this and drop. And for the bearish example, we'll see it dropping, consolidating, dropping. Then it goes to test this and begin consolidating, rising, comes back to test and rises. So this can also be referred to as a head and shoulder pattern. So this is your head and this is your shoulders. So you break the neckline, come back to retest this and continue in the opposite direction. And some of you might remember in your maths lessons that they taught you that whatever happens on the right hand side also happens on the left hand side. So this is a mirror image. If you chop this here, see that you have a symmetrical area. So this is exactly similar or identical to this. So as you know, the market is not, you can expect the market to be identical because there's a lot of choppy faces in the market. So let's get back to the chart. So the first thing I did was to look for an untested area, which was also my goal. So I was expecting the market to come to this area because it's untested. So as you can see on the left, we had a rally, a base, a rally. So the market came back to test this base and pushed up. So when the market came to this area, you can see it left. We had a rally, then we had a base, then a drop. So the market, I was expecting the market to come and test this base. this would be similar to this rally, a base, and a drop. Then you expect the market to come back to test this base and drop. So for the bearish version, we have a drop, a base, a rally. Then the market will come back to the base and rise. So here, this was my area of interest because I was expecting the market to come to this area. So when I'm at my area of interest, I'll be looking for reversal patterns, and reversal patterns are my rally, base, rally, then a drop, a base, drop. This is the reversal pattern that I'll be looking for at my area of interest. So this area will be my target. So let's see what happened here. So the market dropped, we created a base and a drop, and the market returned to this base, but then it did not break the base. So what we did was a rally, a base, and another rally. So when we came back to test this base, we had a drop, a base, and a rally. As you can see, this rally broke this area. So I was expecting a return to this area and a complete reversal. So immediately when I saw this candle breaking this area, then I put my zone here, expecting the market to return to this base and drop to this area. So that's when I decided to put my short position stop loss just above this area, because sometimes you might find that there will be long wicks which do not break this area. They might not break this area with the bodies, but the wicks might spike out of the area. Then my target would be here, which is why it's important to always trade higher time frames, because they are much more accurate. You can see that the bodies do not break the area, but on smaller time frames you might see the bodies breaking the areas, and you might assume that the base is broken and we might be looking for potential long positions. So the higher the time frame, the more reliable the time frame is. So that is how I caught this trade and managed to gain great pips. So I hope you understand this. I hope it makes sense and it helps you in your trading. So let's quickly go to our left and see if we can backtest the same strategy quickly. So as you can see here, we had a rally, a base, and a rally. So we'll be expecting the market to come to this area and retest it. So the market did come back and consolidated a bit, but we broke this area, but then we did not come back to retest this. And if you go to your left, you can see that the market came back to retest this. You can see these 2 weeks they spiked out, but the bodies did not break. Then immediately after that happened, the market strongly pushed down. So that, ladies and gentlemen, is how you can trade the market using demand and supply. Thank you for watching this video. If you think this was helpful, don't forget to like, subscribe, and share with your friends. Thank you.